Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, July 15th, 2021. We are back with Logiq, LGIQ in the US and also in Canada. The stock just started trading recently on the NEO exchange in Canada, which makes it accessible to all the Canadians, finally. We got a lot of big Canadian audience. And, again, for anybody that's brand new to our program that might be watching this video later, our goal is to bring you those stocks which have that 10x to 100x upside potential, companies going after multi-billion-dollar market opportunities that are at a key inflection point. And there's multiple catalysts in place to drive that increase in valuation. We have seen that already with Logiq, formerly known as Wayland Tech, starting last year. I think the stock was $3 and change when we began. I think we hit $14. It was like almost a 5x. And the big opportunity is there's been a pullback to the current price of $2 and change. Obviously, there's you did the big financing and that brought out all the short sellers. So the stock it's basically on sale. It's like a 75% off, big discount right now in the market. So it's a great opportunity for people to basically get in right where the thing was last year. So, Brent, what I want to do is I kind of want to start off with, people need to understand like exactly what the company is. You're doing $40 million right now in sales in the e-commerce business, right? And the valuation is only about 50. You're basically trading at a 1x right now, right?
About 1.5, 1.6, yes.
And your peers, companies are doing pretty much the same thing, are trading at 10 times that multiple, right? So I think there's a built-in path to being a $20 stock just based on that valuation gap closing.
That's correct. That's correct, Jack. The average price to revenue multiple in our peer group is around 21x.
No, I think it's a crazy. I think it's a crazy market opportunity for investors. Of course, this is not advice or anything like that. But just can you explain, Brent, what exactly is Logiq doing? Like, essentially, are you an enabler of e-commerce? What markets? What's your position in the market right now?
Sure. Okay, you're exactly right. We are an e-commerce enabler. So what does that mean? We have two business units. The first one is what we actually started with 6 years ago, Create App, which we have rebranded as App Logiq, and there are other products that fall underneath that business unit heading of App Logiq. But essentially, what that division does is it gets small businesses online. So that's enablement. We've had a historic focus in emerging markets because the bulk of people who are online in emerging markets, doesn't matter whether it's West Africa, South America, Latin America, Southeast Asia, the common denominator in emerging markets is that people use this device, not the computer. Right. So you talk about peer companies like Shopify. They get businesses online, but in order to build your own website, you have to have a computer. You can't build it on your phone. And so you go into an emerging market and you try to talk to potential customers about getting on the phone, but they have to build their site through the desktop. It doesn't make sense. So we started on this, and we're still on this.
So mobile. It's focused mobile first. Is that the right way?
That's the phrase. So that's App Logiq. We get offline businesses online. Data Logiq and most recently LDM, or Logiq Digital Marketing, are our newer business units. And what do? Well, they don't get businesses online. What they do is they focus on existing businesses that get online by way of Shopify, Wix, BigCommerce, a handful of others, WordPress, that help companies get online. But what we do through these two business units is we help them find customers, because that is the single biggest challenge in being online.
So what you do, you like optimize advertising spend, all those things, basically any kind of online marketing, all that good stuff. The ad tech business.
Is yes, exactly. Ad tech, lead generation. We use elements of artificial intelligence and machine learning to drill down and focus on purely through algorithms what demographic of customers are buying products from our customers, in tailoring their ad campaigns to focus specifically on those types of customers.
Okay, yeah, it's interesting because there are two earlier presenters who were basically AI businesses. I mean, the first one is a fintech business, the other is health tech, and you're basically using this. You actually you just bought I think you just made an acquisition of an AI company in the ad space. Was it a couple months ago, right? 6 months ago?
2 months ago, we acquired Rebel AI, which has now been rebranded as Logiq Digital Marketing. We've had a few press releases recently that are starting to focus around what LDM does and who we serve, and I believe that as investors will see in the coming months, that becomes a very important part of our business, not only from a revenue perspective, but also gross margin improvement, and then the ability to attract and onboard customers very rapidly. So I think that's going to be quite exciting.
So I think perhaps one of the issues maybe you talked about before was that the reason why the multiple has not been 10x till now is that maybe institutions, whatever, they thought that, okay, your margins are low, it's kind of a low margin business that you had originally, and so that they didn't value it. But now you're basically, the margins have been increasing. Can you talk about basically how you've improved the profit margins in the last 12 months or so?
Yeah, sure. Let me back up a little bit just to frame it in context for some of our newer viewers. So last year, as Jack was describing earlier, our share price went from roughly $1.80 to a high of $14. We traded comfortably between the $8 to $10 level. So we've traded at higher valuations before. Most of that was in anticipation of our IPO on NEO, which we just accomplished last month. So we're certainly capable of trading at higher valuations. However, the two challenges for us were trading on the OTC market only, and then secondly, as Jack, as you just mentioned, relatively low margins in our peer space. So last year and previous years, our average gross margin profile was about 15-16%. If you look around the peer group, you'll see 30% and higher. That was one thing. The other was trading on the OTC market only. We've actually solved both. We are now listed on the NEO. People may not be so familiar with it, but it is indeed a tier 1 global stock exchange, not just a market, it is an exchange. So we've solved that part. The second part, on the gross margin profile, what you'll see if you look at Q3 of last year, Q4 of last year, Q1 of this year, is you'll see gross margin improvement up to nearly 30%. We report earnings in, about a little under 30 days from now. And without speaking to that, what we have said on the past 3 conference calls is investors should look for gross margin improvement in sequential growth. But I think to put it in perspective, our current gross margin profile is the equivalent of having grown our revenue by about 50%. And so some people say, oh, but your revenues have come down a little bit, or they flatline. Yes, but our gross margins have improved by almost double. And we have publicly stated that we're targeting higher margins. And on top of that, our growth will also start to ramp in a way that I think is going to look very impressive. So there is no reason currently that we are trading at a 90% discount to our peers, because we've solved it. So I think now is a really key time.
Yeah, no, I think the issue is that this is the typical thing that happens in Canada, is that once you announce a financing, then you can't, you have to go into a quiet period, you can't make any, and then in the announcements, and then the short sellers and can't. It's like it's like a professional ecosystem. They can short your stock, and you can't really do anything. I mean, they can't to defend it. So it's really incredible. So stock is $2 now. Again, like the normal range for the stock over the last year has been roughly, let's just say $8 to $10. Basically, that's been kind of the range has popped out above it. And so I think there's a pretty easy path to get back to that. So it's like a 4x. 4x is just based on getting back to the normal place where it's been. But what about? I mean, you've made acquisitions in the past, right? You have obviously the organic growth happening. So there's if the multiple goes to just normal pure multiple, the stock could easily be $20 a share based on that. What about acquisitions? You've built a business through acquisitions, right? Do you have anything else planned?
We've built through acquisitions partly. I mean, you do see underlying organic growth that's been quite good. The past two acquisitions that we made, one last fall and then one 2 months ago, were more from the strengthening of our IP and our platform and services offering. And in the process, we have also met other companies that are larger, privately held. They could have been acquired at a very, very attractive multiple, similar to ours actually, but we didn't have the market cap to do so. So I think your question is more along the lines of so what's next on the M&A side. And interestingly, Jack, I was just our CEO Tom and I were just interviewed on the NEO exchange by their president right before I arrived in your studio today, and he asked the same questions. He said, "So talk to me about past M&A and what you're going to do going forward." So we are speaking about this now. So when we set out to build the company, the goal was always to become $1 billion enterprise, and that entails two things. It can either entail $1 billion market cap or $1 billion in revenues. I think one can certainly enable the other. So if we were trading at peer group multiples at say 20x revenues, which would not necessarily be unjustified, we'd have nearly $1 billion market cap. So what do you do at that point? What's next for those investors that come in at that level? Well, we would absolutely, and we're certainly discussing this now, and we have seen them. We would look to make acquisitions with our stock as currency of companies that have larger revenue bases, sales and distribution channels that we can then layer in our platform into. And then in addition to becoming $1 billion market cap company, you've got $1 billion revenue run rate underneath through strategic acquisition. So can we do it? Absolutely. And we've been seeding the ground for that with the past 3 acquisitions.
Okay, so yeah, so you have a track record of doing deals. So what do you have like an M&A pipeline right now? Like do you have an active pipeline of deals you're looking at? We do.
We actually have a very deep pipeline because in addition to companies that we've met and talked to about potential mergers and acquisitions in the past, year and a half, we also have relationships on the investment banking side, groups that are in the fintech space, ad tech, e-commerce, and they represent clients on what's called the sell side. So they are constantly asking us, what are you looking at? We'd like to show things into you. So our pipeline is robust, extremely robust.
What's in terms of like the scope? Like how big are these in terms of revenues? Let's just say, like, what's the size of some of these deals? The potential.
Yeah, I mean, we've seen everything from some very nice fits, as small as $5 million in revenue, but with 70% gross margins and profitable, and just a perfect fit for our business. we actually do a little bit of work with that one in particular, all the way up to companies that are doing 362 million in revenues, privately held, could probably be acquired for not too much more than that. And would it be accretive? Yeah, it would. And would it put us into the $1 billion category? Yeah, it would. Okay. So once again, between those two. And so, depending upon where we are when we start getting more serious about these talks, which would ideally happen at a higher valuation, yeah, there's a lot.
Okay. So like in terms of, would it be, I mean, could you pick up, I don't know, 50 million in additional revenues through M&A in the next 12 months?
Yeah, we absolutely could. I mean, the one I mentioned that's 360 million plus in revenues. I mean, if we could acquire them at a low multiple, with certainly a higher valuation on our end, that's extremely accretive. And you add that in to our mix, and it's exponential.
Okay. No, so basically, let's say you come out of the 2022. Or you get to a run rate of 100 million next year. Between the organic side, what you have now is I don't know, 45. It might be up to 50 million. You pick up a couple. Pick up a couple of companies that are doing other. And there's a bunch of companies in the ad tech, marketing tech, e-com space that have, an e-com enablement space that have, revenues of 50, 100 million. There's a bunch of.
There are a lot.
So there's a bunch of things out there. So it's, I mean, I think that again, so there's multiple. You have multiple paths to get to that billion valuation, whether it's through, the closing of the valuation gap right now in terms of the multiple between the peers, or you have the potential acquisitions here, which and growth, which can increase again. So there's multiple paths to get there. So it's pretty interesting. Let's get to some audience questions. Paul's asking, NYSE application, what is, he's asking, has it been submitted?
I cannot answer that specifically, but I can say that we were waiting until the NEO IPO was complete to do that. Reg FD prohibits me from giving out information that's not widely disseminated. But again, we have stated that we were waiting till after the IPO to do that.
Okay.
I saw the latter part of the question. Do we meet all the criteria? We do, actually.
Okay, so that's something that could be out there on the horizon. Kevin is asking, as Logiq now has a big gross margin improvement via last year through acquisition, is there any targeted acquisition? Oh, I guess I asked you this question already. So you have anything else? You answered that, right?
Hope so.
Any other acquisition to generate revenue in the next 3 to 6 months? So you think you can have another deal announced within 3 to 6 months?
Without, well. I can't say for sure. But what I can say is that we have a very robust pipeline, and we have engaged in discussions with a number of companies that would be extremely attractive. Would we do it down at this level, at this price level and valuation level? Probably not. They're not going anywhere. But I think the big question for our viewers right here is, what do you do if you narrow that gap? Or do you run out of steam? Is there still room to go? Yeah, a tremendous amount of room to go after that, because we would absolutely embark on larger acquisitions.
Okay. Question: with the partnership with KMSB Tech Mahindra Shopify back in Q3 of last year, is there any significant revenue generated from these partnerships?
That's a good question. So I'm not sure if Kevin has been following what's going on in certain Southeast Asian countries. Actually, Indonesia just implemented their toughest lockdown at the end of last month. So yes, it's worlds away, and yes, things in North America have improved on the COVID side, but they have not improved actually in Indonesia. They've actually gotten worse. So it has it has certainly spurred e-commerce, but actual e-commerce enablement and being able to effectively roll out services that require face-to-face and require central business district populations to be in, at the office. It's been challenging. We've also been undergoing an audit of our Indonesia business unit for coming up on 9 months now. It should have been completed in 3 months, but the folks who were supposed to go into the office actually weren't able to do so. So they've been doing everything remotely, and it's just dragged on. So the reason I mention that is because overall, things are not back to normal, but we expect that to happen very quickly. But we have certainly not stood still during that. We've actually had a number of very exciting developments that have come about during COVID, and certainly the first half of this year that we'll be talking more about. And I think structurally it strengthens the things that we put in place last year that Kevin's asking about.
Hang on, outside my mic, there was some noise. Okay, so it looks like basically there was a bit of a delay because of the COVID situation in Southeast Asia. But things are kind of on track. So you have some deals you're looking at, some M&A activity. What are the news flow can we expect? Because again, you've had to be quiet for the last 5 months. It's taken actually almost 6 months basically.
Yeah, actually a little more. Yeah,
the stock was basically in the quiet period. Do you have what kind of news flow can we expect coming? Should we expect new developments? Any kind of positive catalysts to drive the stock in the next weeks?
We have a very also a very robust pipeline of developments and news. I think the real key to that is actually what we've done is we've taken a look at how we've disseminated news in the past. And a lot of times I think what companies find is that when they put out news, it's almost for the sake of doing so, and it can the message can get lost. We're taking more of a strategic approach right now, and as we start to make announcements, these pieces start to fall into place, and investors can look at them and go, oh, okay, so they acquired LDM 2 months ago. That's what they're doing. That's what they're building out. Oh, these things they put in place last year with KMSB and Tech Mahindra, oh, they're starting to fall into place, and this is the traction they've gotten. And what we've also done is we've broadened our messaging in distribution channels to where investors will start to also see what's termed as thought leadership coming out of us. So it's not necessarily talking about, oh, hey, here's what we're doing at Logiq. It's things that are happening in the industry. What insight do we provide on things that Google is doing that affect ad tech? What are things that are going on in Southeast Asia with Grab or Gojek that affect our rollout? Things that that happen in our space, in our sector, that we have insight into because our management team's tenure in the sector is quite immense. Now, what does that do? For the average retail investor, that's not so helpful in terms of, oh, hey, yeah, I should run out and buy the stock. But what it does is more twofold. Institutional investors, which we've been sorely lacking in up until being listed on the NEO, want to see things that are more tangible in nature, underpinnings of a strategic nature, okay? And then secondly, they want to see thought leadership coming out, real insight into what's going on, because what that does is that indicates that the management team understands macro trends within their industry. And then furthermore, what it does, in very interestingly, the past two announcements that we've made about Logiq Digital Marketing, we've actually gotten new customer leads as a result of that, because being featured in industry press and on social media that is specific to our industry sector has attracted people who understand what we're doing, and they say, oh wow, I didn't know you guys were doing audio. Oh wow, I didn't know that you guys are opening up your platform to include these things, which we've had a real interest in. So it extends beyond just the retail reach. I'm not saying that retail is not of utmost importance, but being able to have institutional investors that say, wow, these guys really understand the sector they're in. They're not all about their company. They understand the underlying dynamics of their industry. It also says to potential customers and existing customers, they're building relevance around their platform that really matters to us as customers and can help us with our business, because that in turn helps our business. So I hope I answered that by saying
so it's going to be the company's basically bottom line is the company is going to be kind of there's more on the radar of whether it's investors, whether it's the business, etc. So that should help increase
absolutely
everything else. Okay, excellent. Okay, Brent. On that note, I think I want to thank you, and we're gonna look forward to hearing more news the next couple of weeks. Get you back on again with because we've had a long delay last with a quiet period, and hopefully there's gonna be some solid developments. Ideally, M&A activity. We love M&A activity. Investors love to hear about that.
For sure.
Fantastic. Okay, Brent, thank you again. Thank you everybody for joining our live stream, and we will see you on the next one.
Thanks, Jack.